Hello, everyone. Welcome to the afternoon show. Just a quick one. Going to do about a 30-minute live stream. Kind of want to go over a few things here. One of them is the current state of the markets. Markets are pretty much green across the board as far as the indices go. The Dow Jones made a new all-time high. But yet, under the hood, we have a little bit of weakness in growth stocks, specifically in data center stocks, which I would say, technically speaking, we're in a data center bear market, 20% or more from all-time highs for pretty much most of the stocks we're going to talk about. But also, what exactly is full stack? I know there's a bit of a debate as to whether some of these companies, CoreWeave, NBIS, CIFR, or IREN, which one of them are full stack and so on. Long answer short, IREN is the only 100% full stack. NBIS, it does have full stack data centers, and CoreWeave does not have is not necessarily a full stack data center as it is right now. And CIFR does not have software AI cloud offering as it is currently today, but a little bit more on that later as we just dig a little bit through their earnings. But with that being said, I don't think that's necessarily important in terms of the moat for a lot of these companies. However, there is a lot of competition in this space, and I will touch on that one a little bit later. And what in the world happened to CoreWeave? I know there's like a lot of question as to, NBIS is down because of this or IREN is down because of this. If you look across the entire data center market and sector, all of them are down. I don't think this is necessarily attributed to anything that we saw in earnings from IREN or CIFR or NBIS, but might be a little bit of scare from news outside of that, and possibly maybe a little bit from the news that we saw from CoreWeave recently. And finally, the AI cloud potential, which I did touch on a second ago, a little bit more to do with CIFR as far as the deal that they have with AWS, but more on some things that came up during the earnings call last week. So let's get right into it, guys, the current state of market. But before I do, I want to thank all 40 people for joining here. This one I'm doing solely on YouTube instead of Twitter. I feel like the chat interaction on YouTube is way better than Twitter. I can't even reply to people on Twitter when you do comment on there. So I think I might just start continuing to do most of the live stream specifically on YouTube. And it keeps the community from within and provides comments of people who want to watch a recording and so on. All right, guys, let's see the current state of the markets. So let me just do this, and share my screen. You know what? Actually, I'm going to want to share the sound because I'm going to want to do a clip later on from CoreWeave. I know a lot of you guys have been seeing a lot of the CoreWeave on CNBC lately. And to be honest, it wasn't really such a great look. But anyways, I digress. Let's move on to the market. So we have the NASDAQ. The NASDAQ overall has been somewhat weak, I would say, for the past couple of days, and is not too far from its all-time highs. Look like we're about like 3 to 4% away from its all-time highs. But as I mentioned, the Dow Jones Industrial Average hit a freaking all-time high. And that is phenomenal. I mean, like, there's a bit of underlying fear in the market because everything that has went up 200, 300, 400% is down like 30, 40% from its all-time highs. But when you look, I would say outside of the hood or above the hood, the indices specifically, I mean, we're trending pretty nicely here. If you look at the SPY, we're about, I think it's the all-time high was, we're about like 1% from all-time highs on the SPY. Looking a little bit better than the NASDAQ. In the near term, I already went over the NASDAQ. It's about 3% from its all-time highs, mostly because a lot of tech has been weak lately. This chart is not the best one. However, I did like the fact that IWM bounced off the 50-day moving average over here and is holding it. Ideally, though, we don't want to see this tamper or fall. I think a lot of what has to do with the fact that IWM is actually not performing so well is because you had rate cuts. Specifically, we were supposed to get 3 rate cuts this year, right? Which means 1 rate cut per session as far as where we saw it just a couple months ago. We did have 4 rate cuts priced at one point, but that definitely did not happen. But if you can see here, now we have a 60% chance of getting a rate cut in the next meeting at the end of next month, which is pretty insane because just 1 month ago, we had a 92% chance of getting a rate cut next one. So I think this is what really is dampening the effect of small caps and also dampening the upward mobility movement of IWM in general, because they are very rate sensitive. There's a lot of regional banks in this sector, a lot of biotech and so on, and they need to finance that debt at lower interest. And when you get the scare that we might not get a rate cut next month, that kind of scares a lot of investors away, and then they tend to rotate more into the mega cap companies. That's why you see Amazon here still floating around all-time highs. You have Google around all-time highs. You have Microsoft. Oh, I thought Microsoft was actually an all-time high. It's not an all-time high, but it's still pretty up there. It's about $500. You had Netflix not really looking so great, but you do have Nvidia pretty much near its all-time highs. Tesla, I mean, this thing is volatile as hell, but it's still pretty up there. And Apple, of course, is sitting near its all-time highs. You have a lot of money really rotate into these mega cap companies because it's considered a bit safer than the volatility that we usually see with high beta stocks. So if I go down here, I mean, this is, if you're on here, then you're on here and you know about the massive sell-off we've seen from a lot of data center stocks. I mean, we have Applied Digital. I think this is more than 20% from its all-time highs. We have CIFR, more than 20% from its all-time highs. We have CoreWeave, probably one of the worst looking charts out of this whole bunch, all below the 20-day and the 50-day moving averages. There is no 200-day moving average because CoreWeave did IPO less than 200 trading days ago. You have IREN, probably one of the stronger looking charts out of all of them, but the 50-day moving average had a nice little bounce close to the 50-day moving average. I did add a little bit to that today. I added a little bit at the 20-day moving average, so we'll look to see what's going to happen there. NBIS, this is below the 50-day moving average. I didn't add as much to this one today, but I did add to it. And honestly, at the midst of all of the sell-off, I didn't add to NBIS yesterday, but I did add to it today. And I think it was a matter of I don't like to just rush in and just buy the dip heavy when it comes to companies that I want to own more for the long term. So I would say the current state of the markets, from my perspective, is that, if you drill down to the micro, you're looking at specific stocks. Maybe this chart doesn't look so good. This chart doesn't look good, and so on. This chart doesn't look good. I mean, CoreWeave does not look good right now, and I'll give my thoughts on that one a little bit later. But I would say from an indices level, looking pretty healthy. I mean, we're above all the moving averages on the Qs. We're above all the moving averages on SPY. I suspect we're probably going to hit an all-time high very soon. The only unfortunate part is that the market isn't 100% risk on right now. I mean, if you take a look at crypto, there's certain psychological levels and so on. So 100K has been acting as pretty decent support on crypto. The problem is that we're trading below all the moving averages. And, if you're a long-term holder of crypto, which I have a basket of crypto that I hold long-term, I did add to it earlier this week. I think it was on Sunday or Saturday. I did add it to some. On the short term, though, you're below all the moving averages of Bitcoin. Ethereum looks a little bit better, but we're sitting here right in the 200-day moving average. Solana is below all of it. Link is below all of it. XRP is below all of it. It's waiting for news. I think crypto is waiting for some news to come up. And I don't want to make this a crypto space. I'm just talking about the general risk that I see in the market as it is today. These charts don't look so good. But again, if you're long-term, when it comes to crypto, and especially all these other stocks I'm going to talk about, this should be buying opportunities for you. I'm not saying go heavy and go all in, especially if you're long-term, like 2 or 3 years out. There is no rush to go all in on some of these stocks. There really is not. If you're thinking very long-term, then just DCA into these companies. You don't need to capture the best possible price ever, because one, you might miss it, or two, you might go in too heavy too quickly, and then we get a 20% further down haircut from there, and then you might get shaken out if you get too attached to that price. So I would say, guys, I wouldn't say a lot of it is noise, because there's certainly some fear out there. But I would say for the long-term perspective, really a lot of this is just noise, in my opinion. I don't think this is going to be ending anytime soon when I'm talking about the AI bull market. I think we're still very early from a multi-decade scale. There's going to be peaks and troughs along the way. Nothing is ever going to go straight up. I could pull all these data center stocks out here. Yes, for IREN, we're 20, I don't even know, we're more than 20% away from its all-time highs. But guys, just last July, this was in single digits, or June, this was in single digits. I mean, come on, you cannot expect this to just go all the way up. And that's just how I got to say it right now. No, do not think that any stock can go straight up without coming down. Every stock comes down at some point. The question is, how far does it go down? I believe we're going to find some strong support here in IREN around the $51 range if we do go a little bit lower, because that's a 50-day moving average. I thought we might find support at the 20-day moving average, which we did see for a minute. But at the same time, long-term guys, this is not super important. We should be paying to the fundamentals, which I'm going to touch on next. So I was just talking about full stack versus full stack. That was actually one of the topics that I wanted to cover today. And when we look at two companies, we look at, hold on, let me just bring this up here. And I'm going to stop sharing that. We look at two companies. Let's look at, I had a questionnaire, I had a vote the other day. IREN and NBIS versus CIFR and CoreWeave. Okay, actually, you know what? Let me just pull up that post real quick. And I apologize. I did not mean to trigger people in that post. I was just looking at more in terms of like what's full stack and what's not full stack. And people automatically assume that I was saying that because I'm bearish on both of the bottom two stocks and I'm bullish on top two stocks, I'm not bearish any of those stocks. More importantly, I am not bearish. I'm not bearish on CoreWeave long term. I know there's a lot of debate out there. You guys got to remember, CoreWeave gets the most amount of revenue as it is today from the largest companies in the whole world. So I can't be bearish in that. If I consider this narrative a very strong narrative, if we're talking about outperformance, that's completely irrelevant for what I'm talking about, because I don't know who is going to know exactly where a stock is going to be at much later on. Maybe there's a probability of doing that based on how much research you do in a company, how it performs long-term. But as it is today, no one knows if CoreWeave is going to be 50% down from here and if IREN's going to be double from here. But based on this, I asked it specifically on the infrastructure and the products that they do offer horizontally and vertically. I asked, would you prefer a NBIS and an IREN or a CoreWeave and a CIFR? Outlandishly, everyone said NBIS and IREN. Again, doesn't mean some of these companies are better than the other. I just wanted to kind of get a feel for like where everyone's at. But the reason why I paired this is because NBIS and IREN offer, at least IREN is starting to offer the AI cloud, but they're going to be accelerating their product offering, and I believe they're going to be very successful in that. NBIS already offers a full stack AI cloud, and someone actually pointed something before, God Particle. And at first, when I read this, I was like, I kind of took it a little bit like, hold on a second, is this guy just trying to troll, whatever? And then I thought about it for a little bit, and I was like, you know what? This guy's right. NBIS is not full stack across the board with all the data centers. They have co-locations. Some of them are Israel, some of them are in Europe, and so on. But then they do offer full stack data centers, and they are building full stack data centers, which means that they own the land, they own the building, they own all the hardware, and so on. Okay, so NBIS is kind of a mixed basket of those, but they are heading more toward the full stack presentation when it comes to future data centers they're going to build. The exact percentage amount of the 2.5 gigawatts that are slated out for next year, I don't know. They haven't released that information, but they are headed more toward that. IREN, they own everything when it comes to their data centers. Okay, so let me repeat that. IREN owns a full stack when it comes to their data centers: land, hardware, building, the contracting for the power. They pay for all the people who are building the data centers, and they also build the software that's running on top of the hardware versus the bare metal. CoreWeave does offer software services on top of their infrastructure, but they don't offer a full cloud platform. Like, they don't offer databases. They don't offer I'm like running a blank here. They don't offer databases. They don't offer virtual machines when it comes to everything outside of AI workloads. They specialize in AI workloads. When we think about this entire secular trend, it is almost all AI workloads. So in their right, they don't need to do that as far as their business goes, because a large portion of the revenue is attributed more toward the AI workloads, which it looks like there's a large concentration in like 2 or 3 clients. And I think if this theme does continue happening, I don't think there'll be an issue with this company. I don't think this company is going to zero. If they go to zero, that would mean that the companies, the mega caps that they are partnered with, and OpenAI will just be like, you know what, let's just go to these other players instead, which in my opinion, it's kind of hard to do. It's kind of hard to sever a multi-billion-dollar contract, one company, and just go to the next one. That takes time. And I don't think anyone can tell you today whether that's going to happen or not. Now, the question is, will they sign bigger contracts with these other players as the time goes on? And I think we are seeing that. I think we're seeing the Metas, the Microsofts, the Amazon AWSs, and so on. We are starting to see them shift more toward the other players like CIFR, IREN, NBIS, because these guys are offering massive data center capacity at a very fast scale and continuing to build them. And they have that capacity available. NBIS told you in the earnings yesterday that they are all booked for half of their data center capacity as of last quarter. And pretty much the Meta contract would have been great, would have been bigger, but they didn't have any further capacity to build out. And in addition to that, NBIS said in the earnings call yesterday that they have to work closely with their sales team so that they don't over-offer data center capacity that they cannot meet based on timelines. They can do it. And what we saw with CoreWeave was that there were delays in the capacity that they're trying to build out in some of their data centers. And that's what caused the issue with them. That's why I think CoreWeave is more specifically a CoreWeave problem. But unfortunately, a lot of these stocks move on their own, and they'll move in there. A lot of these stocks move in tandem, and they kind of bring the whole sector down based on the sentiment that's within them. Some of these guys are saying that SPY and QQQ are dumping. Let's go ahead and check this out. Oh my God, guys, that's down 30 basis points after hours. That's nothing. We can see this reverse tomorrow. We saw it. We actually saw it up. We saw futures up 30 basis points after hours or in the evening overnight yesterday, and then that like completely recovered again. Okay, guys, if you say that something's dumping, like if SPY's dumping, QQ's dumping, like it's got to be down like 2-3%. Okay, because VIX is 17.5. All right. When VIX is at 17.5, when it's near 20 or above, you're going to have massive 100-point swings in futures. And that is going to move markets. So we might open very red, but then we can end up closing green, which is kind of what we saw today. We saw the markets drop down. We saw the Qs down. What was the Qs down as much as it hit the 20-day moving average at 618 today, and I'm closing above 621. So, no, it's all good, dude. It's all good. It looks bad, when you're looking at the short-term scale, but let's kind of focus more on the long-term scale in this picture. All right, so what did I talk about? Okay, so one thing that I wanted to do now that we're touching onto CoreWeave and talking about the CoreWeave problem, I want to bring up the video that has become very popular on Twitter. And I'm not a CoreWeave bear. I just don't want to own CoreWeave. That's the only thing. And that's just me. Might be different for other people. But for me, that's why I don't want to own CoreWeave. I see much more alpha in other companies for myself. I don't mean any disrespect for people who do own CoreWeave. I'm not someone who just like shoots off slander to other stocks because I just don't own it. I think they're all going to win. But I just do think the short-term move on CoreWeave has a lot to do with this that I'm about to play right now. Let me know if you guys cannot hear it, by the way. Okay, you guys definitely cannot hear that right now because I had the sound off there. One sec. Sorry, guys. One second. There we go. Okay. Should be good now. Again, thank you for the 138 people that are here today. I really do appreciate it. If you're not subscribed to the channel, please subscribe. I'm going to try to roll out more content on this. We're only going to be doing this for another 10 more minutes. We have to cut it a little bit short because I got to go pick up my kids. But we're going to go through this video real quick. I'm going to give my commentary on it, and then we're going to close off. We're going to close off just by my final thoughts on like where I think the market's going to go after that. Dude. Oh, here we go.
Wow, this stock must be flying. But you see, there's more to it than that, and that's why I'm glad for first on CNBC interview with CoreWeave Chairman and CEO Michael Intrater. Michael, I appreciate you coming. You don't have to waste time saying hello. Let's just get right to this. Okay, so this was not the quarter you wanted. It was not like you told me or anybody, hey, this was a great quarter. You don't know what you're talking about. You did not do that. You were not proud of this quarter. Why?
That's not true. I am proud of the score.
Well, okay. No, come on. You're proud of demand and that they want you, but you missed the quarter.
So I am proud of all the things that we have accomplished this quarter.
Okay.
I am proud of the infrastructure that we brought online. I am proud of the incredible progress we've made within our software. I am proud that we were once again identified as the singular best solution to deliver artificial intelligence to consumers. I am proud of our backlog build. Quite frankly, every single part of this quarter went exactly as we planned, except for one delay at a singular data center.
At a singular data center?
At a singular data center provider.
That's better, because people may think it's one complex.
Yeah.
But in reality, when I go over the numbers, we're talking about multiple places, and it just so happens that the places are all connected with an outfit called CORZ Scientific that you tried to buy. Denton, Texas, Austin, Texas, Muskogee, Oklahoma, Marble, North Carolina, Dalton, Georgia. Aren't these the problems that you have with CORZ Scientific?
So, look, CORZ Scientific and CoreWeave have been working together to bring on infrastructure for a long time, and we're going to continue to bring that on. You're going to see the infrastructure that was scheduled to be brought on in Q4 coming online in Q1 almost entirely. There'll be some that kind of comes on in Q2. You're building massive scale infrastructure. It's very physical. It's very large. It requires coordination across all of the trades, the physical construction, and there's a delay that hit. This delay will clear itself, and the infrastructure will be brought online.
Why did you use a failed Bitcoin miner that came out of bankruptcy as recently as 2024 and counted on them? And was this one of the reasons why you wanted to buy them? Because this is not you. This is not the way CoreWeave works. You don't make promises and then not deliver.
Yeah, so look, they have infrastructure, they have power, they have physical data center capacity. They're a good partner. We're going to work with them as we continue to build.
Are you losing any customers because of their influence?
No, absolutely not. We're not losing any customers. And what's really important is all of the contracts that reside within those data centers are being shifted out by the clients of ours. So there's no revenue lost. There's the only impact on us is a delay of a quarter that you're going to see clear itself shortly.
And you still have huge demand from Microsoft. How about from Meta?
There is, as I have said every time I'm on this show, there is insatiable demand for the infrastructure and product that we provide.
Thank you.
This is a delay that is associated with the physical component of this business. It is a delay that will get fixed and passed through. And the other point I want to make that's really important is getting a data center online is difficult. Running the physical data center is not very difficult. And so once we get these this infrastructure up and deployed
for your company.
It was on mute, guys. My bad. I wanted to touch on a little bit of what Jim's alluding to here. This is a CoreWeave problem, and I don't think this is going to necessarily be a long-term issue with them. I think that they're going to be able to meet the deadlines a little bit later, but they're still going to be able to meet them. It's not a matter that they're not able to get their hands on the power. It's a matter of the power shells that do hold this power, or the energy used for the data center itself, is lagging a little bit. And that's mostly attributed to CORZ Scientific. And I think what Jim was kind of scrutinizing a little bit was like, why did you basically go with CORZ Scientific if you're doing so well? And it seems like the CEO just, I don't want to use the term fumbled a little bit, but he didn't really have an explanation. And in my opinion, if you're on public television and Jim Cramer or someone asks you a question and you just had your earnings and you're already down 5-10%, and you don't have an answer for something when you're asked a question, the market hates that, right? It doesn't mean the company's going to fail. It just means in the current market, I'm on mute. Please tell me I'm not on mute. Oh, okay. That was a little bit laggy. I took it off mute. So you should be able to hear me. Please tell me you guys can hear me, because I'm like, okay, yeah, you guys should be able to hear me. The market is not long-term looking, guys. It looks like max 3 months ahead of time. It doesn't look for, even sometimes maybe a couple weeks ahead of time. It doesn't look further than that. The market is not a long-term forward-looking machine. The thing is that algorithms move based on short-term movements, stop losses, moving averages and maybe certain headlines. And when you have an event like this, where the quarter, where they had to guide down, where they had to mention the word delays, where they had to, well, the CEO went on CNBC and they didn't have an answer for Jim, the market sells off a stock. But the problem with the market is that it looks beyond anything that has to do with this sector, and it sells those off too. And the additional problem is that you see other headlines come out that talk about power capacity problems. And then you see Michael Burry shorting tech, basically, and shorting AI, and coming with all this stuff with like 5 million viewers in a matter of an hour. It creates FUD in the market. And the advantage of being a retail investor is that you can look past all this FUD. You can look at the long-term picture past today's numbers, which, in my opinion, the numbers for these companies in this current quarter, the trailing numbers were not amazing. They weren't. But if you're buying this company based on the last 12 months of earnings, it doesn't even show what the potential for the ARR they're all projecting for 2026 is going to be. And when you look at that model, that is what makes these companies bullish. Not today, not after a single interview from a CEO, not after seeing that, oh, they missed on EPS or whatever because of some write-down they had on their earnings, specifically for IREN. It's like, that is not important. What is important is that they deliver when they say they're going to deliver, which they will deliver, because we've seen it. We've heard the CEO, we've heard management say it across all these companies that they're going to deliver and meet the ARR that they're guiding for. And if they don't, then that's going to be a problem, which we did see from CoreWeave, that when they didn't deliver, it's going to be a problem. If these companies don't deliver, it will be a problem for their stock price in the short term. Again, if you're looking more to the long term, then it's just noise and it provides an opportunity. Now, the question is, am I buying the dip hard right now? No, I'm not. I already said in the beginning of the video, I'm not taking a mortgage out of my house. I'm not like selling all my stock right now to buy it. Maybe some short-term positions, maybe cutting a little bit of BM&R for my trade, or maybe selling some companies selling some option positions that I make profits on, or maybe some net new cash I might add to it. But I am not going all in some of these stocks right now. In fact, that is not in my risk tolerance to go all in stocks. And in fact, I would say that, for most people, they probably shouldn't. But, if you're younger, you're in 20s, or maybe you have a little bit extra money to spend, or maybe the conviction's high. I'm not going to speak for anyone else. For me, I got a family, I got kids, I got all this crazy stuff I got to pay for. I already have positions in like Amazon and stuff that I don't want to sell, but net new money, I think for the long term, these are some good prices to buy here in terms of strategic DCA. But if I were like in my early 20s, like I would probably split the DCAing up maybe into tranches and just continue adding over time. And maybe you get a better price, maybe you don't. But if you're 20 years old and you're saving money for retirement, which is 45 years from then, and you don't need the money today, put money in your high conviction companies. Okay. Again, doesn't need to be all in at once. You don't need that money for 45 years. Okay. IREN's not going to go to $300 tomorrow. It's going to take time for it to play out. And you don't need to worry about any crazy 10, 20% moves today, because if your conviction is strong, you should believe that you should be outperforming the stock market over a period of time. That's at least a 10% on an annualized basis over the course of 40 years. Peanuts to the prices you're seeing today. Peanuts. If you really believe that this stock, this company is going to succeed, which I strongly believe that these companies will succeed, waiting for a 2% pullback does not seem just for me. It is not. But to each their own. That's how I work. All right, guys, thank you for coming here. I'm going to do some more videos on this and release them as the time comes. Again, I apologize, can't stay a little longer. I got to go pick up my daughter right now. They're going to be yelling at me when I get there. Appreciate you guys. Talk to you guys later. Peace.